Welcome to Daily Crypto Edge. It's Monday, December 29th, 2025. After a weekend of whiplash price action that probably shook out even some of the most seasoned traders, the market has just staged a really powerful reversal. So the big question is this just another bull trap, or is this the start of the year-end rally we've all been waiting for? Let's dive into the data and figure it out. So here's what we're going to do today. We're going to break down exactly what this reversal means, build the case for why this rally really has legs, and most importantly, map out a clear playbook for both Bitcoin and Ethereum as we head into the new year. So let's get into the plan, and as we do, remember, these are probabilities, not guarantees. Risk management is your only edge. All right, let's kick things off. First up, what in the world just happened to start the week? We had that crazy Sunday flush, but honestly, what came after is what's really important for our thesis today. Okay, now this is where it gets really interesting. Take a look at the difference in performance. Yeah, Bitcoin posted a solid 2.1% recovery, which is great. But look at Ethereum, up a full 4% from its lows. That's almost double. This outperformance, this is a major clue that we are going to be tracking very closely. It suggests ETH has some serious relative strength right now. So let's just quickly recap the weekend madness. First, that Sunday flush. It did us a favor, clearing out a ton of excess leverage, which is always a healthy reset. Second, and this is huge, Bitcoin defended that critical $85,000 level on the weekly close. And third, over on the Ethereum chart, we got a picture-perfect hammer reversal candle, and today's green candle just confirmed it. All signs are pointing to a structural bottom being in. Okay, so that's the what. Now let's get into the why. Why does this all matter? This isn't just some random technical bounce. We've got some powerful fundamental and sentiment drivers lining up right now that suggest this move could be the real deal. First off, the calendar. We are literally in the final 48 hours of tax loss harvesting for 2025. This is when funds sell their losers to lower their tax bills. Well, that selling pressure is about to get turned off like a light switch, and that removes a massive headwind that's been holding the market down. And what's the market feeling while all this is going on? Absolute extreme fear. The fear and greed index is sitting at a paltry 22. This tells us almost everyone is pessimistic, which, as you know, is classic contrarian fuel for a monster rally. And honestly, this quote from our advisor notes just nails it. When prices start to creep up, but everyone is still terrified and skeptical, stuck in disbelief, that is when you get the most explosive moves. The market absolutely loves to climb a wall of worry, and it looks like we're building one right now. And the on-chain data, well, it backs all this up. For Bitcoin, institutional money is starting to flow back in, and the supply is tightening up. But again, look at the story for Ethereum. Flows are strong, its supply is actually deflationary because of network burns, and we are seeing seriously aggressive buying from large whale wallets. The smart money is making its move. Okay, time to get tactical. Let's translate all this into a solid, actionable plan. I think the phase of just buying the dip is probably over for now. We're shifting into ride the trend mode. So here is the playbook for Bitcoin. Now, the key here, and listen up, is that we are not chasing the price. We're looking for a smart entry on a little pullback to retest intraday support. We've got that marked as our new buy zone between 86.5 and 87.2. Our stop loss is set at 83.5, safely below that weekend chaos. And our first target, we're looking up at 92,500. All right, now for Ethereum. Based on everything we've seen, that outperformance, the on-chain strength, we are positioning ETH as the higher potential or the alpha play for this rally. For ETH, the game plan is to add on any pullbacks. The sweet spot, the ideal buy zone, is right around that 2580 to 2620 area. That was old resistance, and it should act as brand new support. We can tuck a stop loss in at 2440 to protect the position, with our eyes on an initial target of 2950, where we know there's a big pool of liquidity waiting. All right, let's pull all these threads together into one final strategy. How do we actually navigate the next few days? Well, we think in terms of probabilities. Our main scenario, the one we see as the most likely, is what we are calling the January pre-run. And we're assigning a 65% probability to this happening. So yeah, this is our base case for how the year is going to close out. The thinking here is pretty simple. The tax loss selling is already pretty much done, and big institutions start buying early to get ahead of the January rush. If this plays out, we'd expect Bitcoin to bust through 90,000 and Ethereum to reclaim 2,800, probably by Wednesday. The action here, It means being positioned with a heavy allocation to spot assets right now. But you always have to be prepared for the alternative. Scenario B is what we're calling the tax loss finale, CHOP. One last bit of choppy price action before the real rally takes off. We're giving this a 25% chance, so it's less likely for sure, but still very possible, and you absolutely need a plan for it.
So in this scenario, we'd see one last wave of selling on December 30th as funds wrap up their books for the year. That would probably push Bitcoin back to test 85K and Ethereum down to 2550. And our action plan for that is crystal clear. You view that dip as the last big buy-in opportunity, and you deploy your remaining stablecoin.
So, putting it all together, here is our recommended portfolio allocation. We're holding 40% in Bitcoin as our core position, but we've upped our Ethereum allocation to 45% to really try and capture that potential alpha. And we're keeping a nice 15% chunk in stablecoins ready to pounce if we get that final dip from scenario B. So keep your eyes glued to these two dates. Tomorrow, December 30th, watch for some serious volatility around the U.S. market open. That's 14:30 UTC, as that tax selling officially ends. And then on the 31st, the monthly candle close is everything. A Bitcoin close above $88,000 would be an absolutely massive bullish signal for the first quarter of 2026. So, the final question is, are you positioned for what could be a very, very explosive start to the year? The data really suggests the tide is turning. If you want daily crypto market reports and tips for trading, subscribe to Trade Compass and turn on the notifications. Hit that bell so you never miss a move.